What if everything you were taught about money is about to fail? A silent countdown has already begun, and it ends in 2027. Economists don't call it a crash. They call it a red line. This line divides two worlds: those who adapt and those who collapse. For decades, banks promised safety, stability, growth. Save your money, buy a house, trust the system. But what if that system is no longer designed for you to win? Because the truth is, your bank is no longer a safe place. It's a trap, a system quietly shifting beneath your feet. Invisible forces rewriting financial rules, and your money losing value every second you hold it. This is the 2027 financial red line, and you need to see it coming. For decades, real estate was the ultimate dream. A house meant security, wealth, stability. But behind the dream, the numbers started breaking. Mortgage rates surged to levels the middle class cannot sustain. Homes sit empty, not because no one wants them, but because fewer people can afford them. Entire regions are crossing the red line. Real estate is no longer an asset. It's becoming a liability. Rent rises faster than income. Ownership drifts further out of reach. Banks tighten credit, locking more people out. The system feeds on debt, not ownership. New housing slows down, supply tightens. High-end units sit unsold. Meanwhile, middle-class housing deteriorates. The illusion breaks here. Property no longer guarantees wealth. The red line moves through housing markets first, and millions are pushed backward, not forward. The second pillar was always your job. Stable income, predictable growth. But that world is disappearing faster than expected. Artificial intelligence isn't coming, it's already here. Finance roles are being automated. Middle management is vanishing. Decision-making, now handled by algorithms. And the people being replaced are the educated middle class. That's the second red line. Income instability. And most people won't see it until it's too late. The third pillar, savings. The third pillar, savings. Numbers in your account may rise, but purchasing power is falling. Because inflation isn't just rising, it's accelerating every day. Essentials cost more each month. Energy becomes more expensive. Meanwhile, money supply expands rapidly. More money, chasing fewer assets. Real assets surge in value. Cash becomes the worst performing asset. Your savings appear stable, but in reality, they're shrinking. Holding cash is like holding melting ice. The wealthy move into assets early. The middle class stays in cash, and the gap between them explodes. That's the third red line, asset inequality. Two financial realities, diverging permanently. But there is a way forward. The system may change, but strategy can adapt. Step 1. Move beyond traditional banking. Banks protect systems, not your wealth. Diversify into hard and digital assets. Step 2. Invest in skills, not just savings. Learn to work with AI, not against it. Those who control tools, control income. Step 3. Build multiple income streams. One job is no longer enough. Income must be flexible and scalable. Security now comes from adaptability. Step 4. Think globally. Opportunities are no longer local. Wealth flows to those who move fast, and those who see the shift early win. The 2027 financial red line is not a prediction, it's already forming. Right now, one path leads to dependency, the other to financial freedom. The system will not warn you. It will simply move forward, and those who don't adapt will be left behind. The question is not if it will happen. The question is, will you cross the line? This content is for educational purposes only. It is not professional financial advice. Investing involves risk. Always do your own research.